In crypto they talk about total value locked. What is it? And what are the pros and cons? Hi and welcome. Total value locked is one of the key metrics in DeFi. It's also known as TVL. TVL measures the value of the assets locked on a blockchain. It's used to know the total value of all assets locked on a particular platform or application. This includes all the cryptocurrencies locked in smart contracts like liquidity pools or collateral for loans, and all the other assets that the platform has tokenized. So why is TVL so important?
I don't know.
The easy and simple answer is that it provides investors with an indicator of the platform's overall liquidity. Platforms with high TVL is considered better investments because liquidity is the most important aspect for the platform's future growth.
This is business.
This is my sweat.
I know, but I did business.
Shut up!
The biggest flaw with TVL is that it doesn't take price fluctuation in account. For example, in November of 2021, the Ethereum-based MakerDAO had around 20 billion US dollars, and around a year later it had around 8 billion dollars in locked value. But in the same time period, ETH dropped from 4,500 to around 1,500 US dollars. So the most of the drop in TVL came from the drop in the value of ETH, and not value being withdrawn from the MakerDAO's treasury.
I work with retards.
Because of this flaw with TVL, I'm gonna tell you some other metrics you can use, which are best used in combination with each other.
I don't remember asking you a goddamn thing.
The first one is utilization rate for lending protocols, which is the percentage of the deposits that have been lent out. A high utilization rate indicates a higher risk that there will not be enough collateral to cover the depositors' withdrawals or liquidators to close their positions.
E-solde, Pumpit.
When too much money has been lent out from the platform, this will increase the risk of a bank run.
I declare bankruptcy!
The next one is the number of liquidity providers. And obviously, the more liquidity providers you have, the better. If a platform has a high number of liquidity providers, there is a safety in numbers effect, because it's less likely that if one or a few liquidity providers leave the platform, it will cause liquidity issues for the platform. Next one is transaction count, and a high transaction count in a liquidity pool means that the pool is active, and it's obviously a good thing. This is a sign that the protocol is being used. You can also see trends in transaction count. If the numbers is going up over time, that means that the protocol is increasing in popularity and adoption. The next one is transaction volume. And it's just the value of all the transactions in the previous transaction count. And the more value that flows around in the protocol, the better, obviously. And the last one is TVL in ratio with market cap. By utilizing the ratio of TVL to market cap, removes all the price volatility inherent in both metrics. The ratio bases the TVL on the total market cap of the token, which can work as the percentage of the token supply that being utilized in a pool. If there's something you want to know more about in DeFi, you can comment that down below and I will make a video about it. And that's it.